Now picture this. You walk into a bank. You're excited. You've been saving. You found the perfect house. You sit down with the loan officer. She types your information into her computer, looks at the screen, makes a face. You know that face. It's the face someone makes when they smell spoiled milk. She says, "I'm sorry. Your credit score is too low. We can't help you." Your heart sinks. Your dream of owning a home, dead. What if I told you that right now, while you're watching this video, someone with a worse credit score than yours is signing papers on their first home? Not next year, not in 5 years, right now, today. And they're not doing anything illegal. They're using 5 secret strategies that banks don't want you to know about. Why? Because banks don't make money when you know these secrets. Stay with me for the next few minutes, and I'll show you exactly how they're doing it. Welcome back to my channel, where I teach the economics of your personal finance to help you achieve financial independence. And in this video, I'll reveal 5 legal ways to become a homeowner in 2026, even if you have bad credit and the banks have turned you down. So grab something to take notes, because you're about to learn something that could change your life. But before we dive in, please do me a quick favor. Hit that subscribe button and turn on notifications. I release new videos every week to help you achieve financial freedom. And here's a quick disclaimer. This video provides educational content only. It is not a substitute for professional advice. I'm not a financial advisor or CPA. Always consult qualified professionals for personalized advice specific to your situation. Now let's get started. Let's talk about the big lie. The system tells you that your credit score is everything. They tell you that 3 little numbers define whether you deserve to own a home. But think about this for a second. Does your credit score know whether you've paid rent on time for 7 years? Nope. Does it know whether you saved $10,000 last year? Nope. Does it know whether you're responsible with money now, even if you made mistakes 5 years ago? Nope. Your credit score is just one piece of the puzzle. It's not the whole picture. Perhaps your score is low because you had medical bills. Maybe you went through a divorce. Maybe nobody taught you about money when you were young. Maybe you're an immigrant, new to the country and haven't built credit history yet. Whatever the reason, you are here now. And here's what matters. Your credit score is just one obstacle, and I'm about to show you 5 legal strategies to get around it. Strategy number 1. Seller financing. This is where things get interesting. Instead of borrowing money from a bank, you borrow it from the property owner, the person selling the house. I know this sounds crazy. It's mind-blowing. But let me explain how this works with a story. Meet Tom, 68 years old. He's retired. He owns his house completely. No mortgage, no debt. Tom wants to sell his house and move to Florida. But here's the thing. Tom doesn't need all the money right now. He's retired. If he gets $300,000 all at once, he'll just put it in a savings account, earning basically nothing. Tom would actually prefer to get steady monthly payments. It's more income, better returns, less stress. Now you come along. You have $30,000 saved. Your credit score is 590. Banks keep saying no. But you don't need a bank. You need somebody like Tom. So you sit down with Tom. You say, "Tom, I'll buy your house for $300,000. I have $30,000 for a down payment. I'll pay you $1,950 every month for the next 20 years, plus 7% interest." Tom does the math. He's earning 7% on his money. That's way better than a savings account. He doesn't have to deal with renters, and if you stop paying, he gets his house back. It's actually pretty safe for him. Tom agrees. You just bought a house. No bank, no credit check, no loan officer judging you. You negotiated directly with Tom. This is called seller financing. Now, will every seller do this? No. But you know who will? Older people who own their homes free and clear. people who are moving for a job and need to sell quickly, real estate investors who want steady income, and people whose houses have been sitting on the market for months. You'd be shocked how many sellers are open to this if you just ask. And the beautiful part? Everything is negotiable. The interest rate, the down payment, the payment schedule, how long the loan lasts, it's flexible in ways regular mortgages could never be. One big warning though. Use a real estate lawyer. Get everything in writing. This is serious business. Protect yourself. But done right, seller financing is a game changer. Strategy number 2. Rent to own, also called lease to own. This one is perfect if you need time to fix your credit but want to secure a house now before prices go up. Let me show you how this works. Meet Sarah. Sarah's credit score is 580. Not terrible, but not good enough for most banks. Sarah has been rejected 3 times, but Sarah found a house she loves, and the owner is willing to do something special. A rent to own deal? Here's what happens. Sarah signs a contract to rent the house for 3 years. Her rent is $1,600 per month. But here's the magic part. $300 of that rent goes toward the purchase price of the house. It's like a forced savings account. Even better, the contract says Sarah can buy the house at the end of 3 years for a price they agree on today. So the house is worth $230,000 today. That price is locked in. If the housing market goes crazy and the house is worth $280,000 in 3 years, Sarah still only pays $230,000. She just captured $50,000 in equity before even buying. During those 3 years, Sarah is living in her future home. She's building equity with every payment. $300 times 36 months equals $10,800 toward her purchase, and she's using that time to fix her credit, save more money, and get ready for a regular mortgage. At the end of 3 years, Sarah applies for a traditional mortgage with her better credit score and uses the money she built up as part of her down payment. Sarah wins. Now I know what you're thinking. What if I can't get approved for a mortgage after 3 years? Good question. That's why you include an extension clause in the contract. Or you use one of the other strategies we're covering today. The beauty of rent to own is time. Time to improve, time to save, time to prove you're responsible. And unlike regular renting where you're just making your landlord rich, in rent to own you're building toward ownership. Just like seller financing. Get everything in writing. Use a real estate attorney. Make sure the contract is clear about everything. Protect yourself. Strategy number 3, FHA loans. This one is actually from the traditional system, but most people don't know about it. FHA stands for Federal Housing Administration. These are loans backed by the government specifically to help people like you. Let me break it down. Here's what makes FHA loans different. They'll accept credit scores as low as 580. Some lenders will even go down to 500 if you have a bigger down payment. Compare that to regular loans that want 620 or higher. And the down payment? Just 3.5%. That's it. On a $250,000 house, that's only $8,750. Not pocket change, but way easier than the 20% many people think they need. Let me tell you about Marcus. Marcus had a 592 credit score. He saved $9,000. Every traditional bank laughed at him. Then he found a lender who does FHA loans. 30 days later, Marcus was signing papers on his first house. Now there are catches. Because there's always catches. FHA loans require mortgage insurance. That adds about $100 to $200 to your monthly payment. And the interest rates are usually a bit higher than regular loans. But here's the thing. You're getting into a house. You're building equity. You're not throwing rent money away. And in a few years, once your credit improves and you have equity built up, you can refinance into a better loan. Get rid of that mortgage insurance. Lower your rate. Think of FHA loans as training wheels. They help you get started. They're not forever. They're just the boost you need right now. Here's how to find FHA lenders. Not every lender does them. Some banks think it's too much paperwork. You want lenders who specialize in FHA loans. Google FHA specialist lenders plus your city. Call them and ask, what percentage of your loans are FHA? If it's below 30%, keep looking. You want specialists who do this every single day? They're the experts. They know every trick to get you approved. And one pro tip, if your credit score is right on the border, like 575, spend 3 months paying down debt to get it to 580. That little bump can make a huge difference. If you're learning something so far and getting some value, please do me a quick favor. Hit that like button, share this video, and subscribe to my channel. Thank you for your support. Strategy number 4, the co-signer strategy. Now before you groan and say, I don't have anyone to co-sign, hear me out. This works differently than you think. Let me explain. A co-signer is someone with good credit who agrees to be on the loan with you, usually someone with a score above 700. If you can't make payments, they're responsible. It's a big ask. But here's why people do it. Parents helping their kids, siblings helping each other, close friends who believe in you. Here's where it gets interesting. The co-signer doesn't have to be on the property title. They can co-sign the loan, but you own the house. They're helping you get approved, but they don't own part of your home. Once your credit improves in a few years, you refinance in just your name, and they're off the hook. Let me tell you about David. David had a 600 credit score. His dad co-signed. David made every payment on time for 3 years. His credit jumped to 720. He refinanced. Dad's name came off. David fully owns his house now. Now let me be very clear about something. Getting a co-signer is a massive responsibility. You're asking someone to trust you with their financial reputation. If you mess up, you don't just hurt yourself, you hurt them. So only go this route if you're absolutely certain you can make the payments. This isn't a game. Here's what you do. Set up automatic payments. Never rely on remembering. Automate it from your checking account on the 1st of every month. No exceptions. Keep your co-signer updated. Show them you're current. Build an emergency fund so a job loss doesn't affect them. This strategy requires humility and honesty. But for people with a strong support system, it's one of the fastest ways to get into a home. Final strategy number 5, credit unions and small local banks. This one is so simple that most people completely overlook it, and it might be the easiest one on this entire list. Here's the thing about big banks. They use computers to make decisions. Your credit score goes into an algorithm. The algorithm says yes or no. No human ever looks at your actual situation. You're just a number. But credit unions, they're different. They can use something called manual underwriting. That means a real human being looks at your application and makes a decision based on your whole financial picture, not just your credit score. Let me tell you about Jennifer. Credit score 595. She applied at several banks, including Chase, Bank of America, and Wells Fargo. Rejected, rejected, rejected. Then she walked into her local credit union. The loan officer sat with her, looked at her rent history, looked at her stable job, looked at her savings, saw that she's been responsible for years despite one medical bankruptcy. She got approved. Why? Because the credit union saw the full story. The big banks only saw a number. Here's what to do. Join a credit union this week. Even if you're not buying a house today, join now and start building a relationship. Open a checking account. Set up direct deposit. Open a savings account with automatic transfers. Let them see your financial behavior for 6 to 12 months. Maintain positive balances. No overdrafts. Consistent savings. When you're ready to buy, you'll have history with them. You'll be a person, not just an application number. And here's an insider tip. Many credit unions have special first-time homebuyer programs with even more flexible credit requirements. But you have to specifically ask for them. They exist, but they're not always advertised. Credit unions want to help their members, so become a member today. Here's a quick bonus. While exploring these strategies, improve your credit at the same time. Here's the fast track. 1. Pay everything on time. Every single time, even $5. This is the #1 factor. 2. Get your credit card use below 30% of your limit. 3. Check your credit report for errors. Go to annualcreditreport.com. Dispute any mistakes. 4. Don't close old credit cards. Keep them open. 5. Consider a secured credit card if your credit is really rough. Here's the reality. Improving from 580 to 650 might take 6 to 12 months. But guess what? You can use rent-to-own or seller financing during that time. You're not waiting. You're working toward home ownership while also improving your credit. A double win. All right, let's get real for a minute. These strategies work. They're legitimate. Thousands of people use them every year, but they require work. They require patience. You might get rejected multiple times. You might talk to 10 sellers before one says yes. You might visit 5 credit unions before finding one that works with you. This isn't a magic button that makes homeownership instant. And you know what? That's okay. Because the alternative is giving up. The alternative is renting forever. The alternative is letting a credit score from 5 years ago define your entire future. Will it be easy? No. Will it be worth it? Absolutely. Because in 2 years, when you're sitting in your living room, in your house, you'll look back and think, I'm so glad I didn't give up. So here's your homework. Not next week, not when you feel ready. Today, right now. Step 1. Pick one of these 5 strategies that feels most doable for you. Just one. Don't try everything at once. Just one strategy. Step 2. Take one action this week. If it's seller financing you have decided to explore, search for sale by owner homes in your area. If it's FHA loans, Google FHA lenders near me and make one phone call. If it's credit unions, find 3 in your area and visit one. Step 3. Join a community. Find Facebook groups about home buying with bad credit. Find Reddit forums. You need support. You're not alone. Stop waiting for permission. Start building your future. If this video helped or inspired you, hit that like button, subscribe to this channel, and turn on notifications. I drop financial truth bombs every week that could liberate you from financial bondage. Also leave a comment below and let me know. Which of the 5 strategies are you trying first? Please share this video with someone who might need it. A friend, a colleague, or a loved one. And remember this, your credit score doesn't define your worth. It doesn't define your future. It's just one obstacle. And you just learned 5 ways to get around it. Thank you for watching. See you next time.